talk to me about this new sort of bigger fund, if you will, how it compares to the earlier versions.
Sure. So Kindred Ventures, I started it in 2014 in San Francisco, and it was really a small seed angel fund with just me and some personal capital. Over the years, had gotten lucky backing some really amazing founders, solving some really big problems in transportation, logistics, cryptocurrency, decentralized systems, even sort of looking at marketplaces like Postmates and Poshmark and StyleSeat. So it's been a great ride, and one thing that I realized was that there was two learnings out of that. One, there's always great seed stage founders looking to bring capital in to speed up on their journey. There's also another situation where we saw, and my partner, who was at a prior venture fund before, saw this as a seed investor himself, was that there are a lot of problems out there that are important to solve out in the world, and we don't want to wait for startups to exist so that we can back them. We want to use some of our operational and founding background and say, how can we assemble a great team, a talented, dedicated team to go after that? And that's what we're doing. We have a twofold focus with Kindred Ventures now.
So you say that you're vertical agnostic, but where are you going to be focusing?
You know, if I could pick themes, we are theme agnostic, but if I could pick themes, you know, the importance of the problems out there really rest in, you know, what is the software and data network that runs our daily lives? What is the transportation, logistics, food, health and wellness sort of supply chain and network that is happening around the world? And that can vary between developing countries as developed countries, but and thinking about cities, what's happening in cities, and if you think about education and work within that. And so I know that's a broad set of categories, but really we like to think about it as where are the problems for people in society today and the economy, as opposed to looking at specific types of technologies looking for a purpose.
You've mentioned transportation a few times, and of course we all know your early involvement in Uber. What do you make of Travis Kalanick selling out almost $1 billion of his shares?
You know, I think there's been a lot of talk about that type of stuff, and the company's obviously under a fair amount of scrutiny just because of the rise and the amount of sort of integration it is into everyone's lives. You know, founders and executives and previous shareholders, early shareholders in any public company find diversification. They're always selling a certain percentage of their holdings after lockup. So I think it's sort of a big deal made out of something that's pretty typical. So if you look at any public company, especially tech companies where there's a large shareholder or set of shareholders in the beginning, from venture capitalists as well as founders, you see this often.
So you think most of this is a liquidity play, not there's a deeper issue going on inside the company and I need to get out sort of play?
No, I think that this is a very typical thing for large early shareholders.
You also mentioned Postmates, which was one of your companies. A competitor, if you will, DoorDash, yesterday said that it was weighing a direct listing. How in this market are you differentiating an IPO versus a direct listing? Why not just raise more money in the private markets and direct list?
Well, I think the private equity markets have made their bets over the last few years in venture, and I think that you're seeing a lot of movement from other asset classes into early stage, mid stage growth, as well as sort of like mezzanine pre-IPO financing. I think a lot of these companies have sort of saturated that market at this point at these valuations, and I think the right thing, just in the current IPO climate, might be to look at, you know, if you're profitable and you have enough cash on your balance sheet, why not do a direct listing? And I think that in certain cases makes a ton of sense. A direct listing is really a better route if you don't need to raise a ton of cash at the actual offering date. You
mentioned profitability. I have to ask, is that even anything on your radar, or you really don't care given how early of an investor you are and you're okay 5-10 years out?
Oh yeah, we're investing. I sort of compare it to being sort of in the deep ocean versus the turbulent surface of the sea, and we're investing so early in a company's lifetime that we're really at the cusp of where technology is applied to create a really interesting offering for customers and participants. And so we're not looking at profitability at seed stage. We're looking at, can you find product market fit with your particular concept?
We only have 30 seconds. Give me your thoughts on WeWork. Do you have any? Have they structurally changed this market environment?
I think if you ask people that live and work for WeWork or have their company there or work out of a WeWork facility, they'll tell you it's great. I think from an investor perspective, valuations mean everything in the private markets. It sort of decides whether or not people think you're a great company or you're a failure. And I think that the WeWork product is still very, very good. I think there's just a fair amount of financial fitness that needs to go into the business model.